First up on the show, for all the big moves in Indian real estate and all the big stories that could shape Indian infrastructure, here's a quick wrap of the latest news stories.
Indian real estate companies' foray into geographies beyond India received another big boost, with Tata Housing announcing its foray into Sri Lanka with an investment of over 2,400 crore rupees to develop a township project in Colombo. To be developed in partnership with the Urban Development Authority of Sri Lanka, the project will be spread over 8 acres of land, out of which 3 acres will be earmarked for rehabilitation. The project will have 4 residential towers, 650 units, retail and office spaces. Come June and you'll have to pay more for your dream property in Noida. The Noida Authority is likely to hike the land allotment rate of residential and commercial properties by 15% and industrial properties by 10%. The new rates are likely to be effective from next month once it's cleared by the Noida Authority at its meeting scheduled for next month. Yet another hit for the realty market. The FDI equity inflows into India's realty sector in the fourth quarter FY14 declined by as much as 45% at $3.96 billion against the previous quarter. This according to a report on real estate market and private equity investment from Capri Global Capital. However, real estate dominated the private equity landscape in 2013, accounting for 12.7% of deals concluded in 2013 as per the report. After public sector enterprises, it's now the turn of public sector banks like SBI and PNB to look at monetizing the surplus real estate assets. These banks need to meet their rising capital requirements, estimated to be at about 8 lakh crore rupees in the next 5 years. The option to leverage real estate assets was discussed at a review meeting chaired by the Finance Minister P. Chidambaram in the Finance Ministry. The proposal is to assess the bank's disposable real estate assets and create a special purpose vehicle for holding them. The SPV will raise capital by issuing bonds or by listing on stock exchanges on the strength of the assets and the rental and lease incomes. Each PSB will set up a holding company to raise capital from the market directly. Jaipur Metro is likely to start its commercial operations in the Pink City by the end of August this year. The trial run of this 4th metro rail project of India is expected to begin in July on the 10-kilometer route from Manasarovar to Chandpole under Phase 1 of the Jaipur Metro Rail project. Construction on this stretch started in November 2010. The cost of this phase is estimated at 1,250 crore rupees. The state government will be directly funding 600 crore rupees, while the rest will be borne by other wings of the state urban development and housing departments. The Chennai City Corporation's plans to white-top most roads in the city have found very few takers. Very few contractors have evinced interest to concretize the city roads, citing reasons like cement roads are long-lasting and less profitable as compared to bituminous roads which need to be relaid once every year. Tenders for 4 arterial roads to be upgraded to international standards at an estimated cost of 79 crore rupees received no response. Spooking the Indian markets a little bit, global economy experts are of the view that the Chinese property market, a key player in the global economy, is likely to go bust. The sector has been showing signs of a downturn with its property activity indicators trending lower since mid-2013. Inventories of unsold homes in Beijing are reported to have risen from 7 to 12 months supply in the year to April. With regard to under-construction houses and total sales, the bulk is in Tier 2 cities where the overhang of unsold homes have risen to about 15 months, and in Tier 3 and 4 cities, it's estimated to be as high as 24 months.